There are over 100,000 people who immigrate to New Zealand every year with the intention to make New Zealand their home, leaving behind everything they know as normal day-to-day life and having to learn new ways of doing things, new norms, new cultures, and different values. There are many people who struggle with this transition and find it challenging to adjust and settle, so they can call and make New Zealand their home. The purpose of this podcast is for me to share my journey and our challenges with the hope that you can learn from me and my family and have a softer landing. There will be good days and bad days, but with time, more good days. I believe we have made the right choice for our family. I want to try and help you do the same, but hopefully with a softer landing. This is Soft Landing, and I am your host, Brett Corlett.
Welcome to this podcast, designed for anyone thinking about, preparing for, or who has just immigrated to New Zealand. Subscribe now so you never miss an episode. Drawing from his personal experience, this series will guide you through the process of preparing for your move and helping you navigate the challenges of immigration.
Hey everyone, welcome back and thanks for joining me again. Really awesome to have you listening to me again on my podcast. Just really want to thank you guys for following me and for listening to me, and I really hope that it is helping you guys. As I say, I've got some feedback which really motivates me to keep going, so I really hope it's helping. For those of you that are joining us for the first time, welcome. It's awesome to have you join us. I do ask, if you've got the time, try go back to the first episode. I give a little bit more insight into who I am and what this podcast is all about and what I'm trying to achieve. So it can hopefully give you a bit of insight and understanding why you would even want to listen to me and why what I'm sharing is hopefully beneficial and worthwhile. So with that, what I wanted to talk a little bit about today is I want to talk about money. I want to talk about insurances, all those type of things. Now, I've got to start off, disclaimer right in the beginning. I am not a financial advisor. Okay, this is not financial advice. If you want financial advice, go to a registered financial advisor, please. That's not me. I'm not a broker. I'm not a financial advisor. Everything that I share is from personal experience, and this is my personal experience that I'm going to be sharing today. Really what I want to talk through is a couple of insurances, and I know I've done a tutorial on the full cost of living in New Zealand, and I've given a full breakdown on my YouTube channel, but that is really starting to give you an idea of what you need to budget for a family when you first get here. What are your living expenses? What are the things you have to pay? And it's more in the first year when you're starting up, and then when you finally got, in our case, two income earners. So when my wife started working, how we had two incomes coming in. And this is really what I want to talk about today, is once you've got two incomes coming in, or you've got to a point where you're starting to settle and financially you're starting to get a fair amount of income now to where you're not just surviving, you're starting to thrive. And that's when you've got to start thinking about these other things. I'm not saying insurance is not important in the beginning, but I do know when you first land and you're just trying to start out, it's tough. I mean, you're just trying to make it. You're really just trying to survive. So you're not in thrive mode. You're not thinking insurances and retirement and all those other type of policies. You're thinking how to just get food on the table and a roof over my head. So this is more along the lines of once you've got past that, possibly first few months, a year, and you've got to the point where it's okay. Now I'm starting to think ahead a little bit more. I'm trying to think about insurances to close some risk that we might have. I'm thinking longer term for investing for our future, for retirement. I'm thinking about life insurance should, God forbid, anything happen. All those type of things is really what I'm starting to talk about a little bit today, is all those type of insurances. I'm going to start off with the first one. So the first one I want to talk about a little bit is, and I have mentioned in some of my other podcasts and also in some of my other tutorials on my YouTube channel, but it's ACC. So ACC is something that you pay for that is actually part of your salary and it does come off. It's a government, insurance or accident insurance fund. So really what ACC is for is it's for any accidental or injuries caused when you're out and about. So it could be that you've had a car accident and you hurt yourself. It could be that you, in my case, in the gym and you've hurt yourself. It's any injuries from accidents that you've sustained while here in New Zealand. And it does come off on your salary. It's a contribution that you would have. It automatically comes up and you gets paid to this fund, so you can claim from it. ACC fund, in my example, we've claimed twice now. So the first time that we claimed was actually with my son. So he was, if you've listened to my other podcast, he was leaving school, and when, I don't know if he tripped or if he was running on the sidewalk or the pavement, whichever country you're from and what you refer to the sidewalk as, he was running along and he tripped and he actually fell and he split his lip. And I remember my wife had to rush him off to the nearest emergency. And when we got there and they were treating him and stuff like that, they turned around to my wife and they said, oh, this is covered by ACC. So they actually register an ACC claim for him, and everything from that treatment to any post-treatment thereafter, be it if he had to have follow-ups or he had to have, in my case, I hurt myself at the gym, so I had to have follow-up physio. All of that is covered under your ACC claim. So that's what ACC is all about in New Zealand. I felt that it works well. I haven't had any issues with any of the claims that I've had. It doesn't mean you can't have, or there's not a potential need for further private insurance. Don't think ACC covers everything. It doesn't. This is just with regards to accidents. Okay, so it's injury or claims by something that accidentally happened and you've injured yourself. Okay, so that's what the ACC is all about. Like I said, my son, we did his claim when he fell on the sidewalk and he split his lip. So that was all covered. Mine was in gym. Yeah, I was pushing too heavy in the gym and I hurt my knee. I went to go see the GP. That GP then said to me, oh, this is an ACC claim. And he put in a claim for me and everything post that. So all the physio and everything on my knee was all covered. And they even said if I had to go for further surgery, so I did go to a specialist, and that was also covered by the ACC. He had a look at my knee, said, no, let's try the physio. Went for, 6 or 10 different physio sessions. All of that was covered by ACC, by the claim. There was a little bit of a shortfall, an admin fee and whatever else, but I'll talk about it a little bit later. I do have a private medical insurance that covered that shortfall that ACC didn't cover. If you didn't, you'd have to pay that out your pocket, okay? And it's a small amount, it's not a big amount, but you would need to pay that. So that's where I had my private insurance, but the ACC covered majority of everything that I had to do. Even if I had to go eventually have surgery on my knee, they would have covered that as well. Luckily, I didn't have to do that. Just so that you know what ACC is all about. Next one, I guess I've already started touching on, is your private medical insurance. So, look, private medical insurance, if I talk back to when we were in South Africa, so I don't know where you're immigrating from in the world, but South Africans will relate to me that in South Africa, unfortunately, the public health system, geez, I don't even know if it's worthwhile calling a public health system. It's really dire. It's not in a good way at all. And if you had to go have something happen to you where you would have to be treated via the public health system, again, my opinion, I believe it's bad. It's really, really not good. And I know a lot of the Kiwis here and locals here, they complain about the public health system here in New Zealand, but I promise you, the public health system in South Africa is like 100 times worse. 100 times worse. I don't wish my worst enemy to have to be treated via the public health system in South Africa. I don't even know if they'll actually treat you and you'll survive if it's something that's really, really bad. If I think back to when I was in South Africa, and look, I know it's also a difficult one because private medical insurance is expensive. It's expensive here. It was expensive in South Africa. But I think in South Africa, geez, if you could afford it, it was more like you really needed it for your family because you didn't want to go through the public health sector. If I think back in 2019, I have shared how I had cancer in 2019, and I'm just thinking if I had to, I don't know if I would be here today. If I had been diagnosed with my cancer in 2019 in South Africa and had to be treated through the public health sector in South Africa, I don't know if I would have got the treatment I needed, the surgery I needed. I don't know if I would have made it. My cancer, I know maybe I'm being glass half empty here and not being very positive, but I just don't think I would have made my 40th birthday. I don't believe I would have got the treatment in time. I don't think it would have even been picked up in time. That's where I believe and have learned, and that's how we are, risk averse with going for the private medical. So back in South Africa, I had it in private medical there. It was Discovery. It was a brilliant plan. It paid for everything to do with my cancer, all my treatment, my radiation, follow-ups, oncologists, etc. It paid for everything. So I'm so grateful to have had my medical aid back or private medical insurance in South Africa. So it does mean that what we've done here is we've done the same thing. We've also taken out private medical insurance here in New Zealand. The medical insurance that we've gone for, it's a company called Southern Cross. Southern Cross is probably they got the lion's share of people that have private medical insurance here in New Zealand. They're one of the biggest organizations. They're not the only, there are a lot of others, but I think, in my opinion, and from what I've seen, Southern Cross is probably one of the biggest here and has the biggest amount of people, members on their books. Southern Cross, if I compare it to Discovery back in South Africa, look, if I really be honest, I think the medical insurance back in South Africa, private medical, it was probably better than what it is here, okay? And private sector even sometimes worked better back in South Africa. You could make a doctor's appointment, get a doctor's appointment the same day. You know, they moved very quickly. We had a lot of good specialists. Yeah, okay, maybe it's 2.5 years ago. Maybe things are changing, I don't know. But it worked well. I'm not saying it doesn't work well here. Southern Cross is just, I'm comparing it to what I know. And my experience of private medical in South Africa was good. So comparing it to here, I'm not saying it's bad, but I've had the opportunity, call it an opportunity, I don't know, to test out the public health sector here as well as the private health sector. So what I mean by that is when I got here, I mentioned to you I had cancer when I was in South Africa. So I got all my treatment in South Africa. I got my tumor removed and everything in South Africa. And then I went into remission, but then there's surveillance that they've got to do. So you've got to have constant follow-ups and everything once you've had cancer for at least the first 5 years to make sure it doesn't return. So within those 5 years, I was immigrating to New Zealand. So when I arrived in New Zealand, I was still towards the post-end of my 5 years. So I still had, I don't know, 1.5 years, 2 years left of having surveillance done. So they would keep checking up. So I needed to be allocated to an oncologist here in New Zealand. So when I got to New Zealand and reached out to my GP and told him, hey, my story and what was going on, with Southern Cross, they would cover everything you had, but not pre-existing conditions. So obviously now that I had a pre-existing condition, i.e. my cancer, that wouldn't be covered for X period of time. So it would take a couple of years being on a certain plan with Southern Cross before they would waiver that and cover me 100%. So it would mean everything that was pre-existing that's not covered, I'd have to do it through state. So that meant my last bit of treatment of my cancer, I had to do through state. So I had to get a state oncologist assigned to me. I had to go for MRIs, blood tests, other scans, whatever else, through the public sector. So I had to do that through the New Zealand health system, public health system, not the private health system. My experience wasn't bad, really, I must tell you. It's definitely 100 times better than what it was back in South Africa. Not when I say back in South Africa, compared to our public health system. I don't think it was 100 times better compared to the private health system. I still believe the private health system back in South Africa was better, but the treatment wasn't bad. The oncologist, the biggest thing was I had to travel a little bit to go see him. So there wasn't an oncologist near where I stayed. So there was a little bit of travel. When I say a bit of travel, probably about a 30-minute drive to get to him. Also, you don't get the appointment on the date that you want. With private sector back in South Africa, and I've seen here, being on private medical, it almost not jumps the queue, but you're paying to get quicker service pretty much. And what I would see when you're going through public sector here is, I got the oncologist, but I had to wait for when he was available and when he could tell me, and that was a little bit of a wait. So it took, I don't know, a couple of months, probably like 2 months before I could see him from when I reached out, or my GP reached out to get an appointment with him. Finally, when I got the appointment, got to see him, then he will start talking about the rest of my surveillance treatment, meaning when I had to go for tests and whatever else. Starting off, he wanted to send me for MRIs. Again, private sector back in South Africa, when I needed an MRI and I'd seen the specialist, within a day, 2 days, worst case a week, it would have been set up that I'd gone to whichever hospital to get the MRI tests, etc., that the doctor wanted. Here, because I had to do it through public sector, the oncologist says fine, they will get the guys to get the radiologists and the, I don't know what you call these people that run the MRIs and everything, they would get hold of me for an appointment when I could go for my MRI. That probably took at least another, month, 2 months before I could get that appointment. So it just took a lot longer, and that was just the appointment to get the MRI done. Then once I got the MRI done, that had to be processed and sent back to my oncologist. So it took a good couple of months probably 4 or 5 months when I first got here, from seeing the oncologist to getting the test that he wanted to getting the results back to him, for him then coming back to me and going seeing him again, just for him to be able to tell me, okay, yeah, it's all looking good, so this is our plan, we'll see you again in 6 months' time, and you'll go for tests and everything again. So they do what they need to do, and it does work in the public sector here. It's just, my opinion was, it took a lot longer. What I was used to back on private medical in South Africa, it was quick. So you would see the specialist, you'd get the test done, within days, weeks, everything is getting done quite quickly. So that's the only difference that I've picked up, in my opinion, here being in public health system versus private. I've also got to use the private health system here. So over and above my ACC claim that I spoke to you about earlier, over and above coming here with cancer, or not cancer, but post-treatment of having cancer, I've had to use public sector just for my follow-ups and making sure that I was all okay and still clear for the first 5 years. I also had a private procedure done as well, separate to that, that I got done through private sector. So that again, I got assigned first the GP then assigned me to a specialist. The specialist then saw me and said, okay, we've got to book you in, whatever else, it's a small procedure that we need to get done. And from seeing the GP to getting an appointment with the specialist probably took a week or two. Got to see the specialist. The specialist then saw me and said, yeah, we need to get you in for a procedure. That was another week or two. Went in for the procedure, got everything done, saw the specialist a week or two after that, got my results, and now we're just following up and everything's okay. So again, the experience was quite quick being in private sector, dealing with my Southern Cross, etc., and all the payments being paid by them. So that's really my opinion on the differences between public sector and private sector here. You'll hear a lot of locals and everything complain about the public health system. It's not perfect. I'm not going to sit here and pretend that it is perfect, but my experience, it does work. It's just a little bit slow. I'd also know that do struggle with some of the specialists and everything like that. So sometimes you've got to travel, depending on where you are in the country. So that can be tough. But I guess that's why you pay the little bit extra for the private medical. Private medical we're on, as I mentioned, is the Southern Cross. Well, we've also got the Southern Cross for, besides having that extra cover because of what I've explained to you now, is that certain things are not covered 100%. So what I mean by that is like dental. So dentists and everything like here are a big thing in New Zealand. Your kids will be covered by dental, but it's not all dental. What I mean by all dental is if they've got skew teeth and everything like that, and they've got to go to a, what do they call them? Is it an orthodontist? Oh, geez, I hope I get the right wording, but it's where they put the braces and everything else on. So I know my son is now a teenager, and he's probably going to need braces and stuff to straighten his teeth. That is not covered in the public sector. So if he has holes in his teeth and cleaning his teeth and maintaining his teeth and everything like that, yeah, that's all covered for kids here. Dental is not covered for adults, so that's why we've also got the Southern Cross. So we've got a bit of dental cover on the plan that we're on. But again, it's only like $750 a year per adult that we covered for, and I promise you that gets eaten up very quickly, especially if your teeth are not great. I think just getting one filling and everything done and seeing the dentist for less than 30 minutes doing a filling, you'll spend like $300 just like that, and that's almost half of your cover for the year. So dental cover is a biggie, let alone if your kids now need to go get braces and stuff. You do get a bit of dental cover there, but it's not going to cover everything, so you're going to need to pay. So it does cost a little bit, but that's where we've been blessed to have the Southern Cross. Also, with the company that my wife works for, the reason we're able to get the Southern Cross and the plan we're on is there's a benefit with their company, and they contribute towards our private medical with Southern Cross. So we're really blessed in the situation we're in, so that, yeah, it's still expensive, but at least we've got her company that's contributing towards it, so making it a little bit more affordable for us. So yeah, just starting off, as I said, it's the ACC. I've explained what that's all about. I've explained now the private medical and why we've got the private medical in our opinion, and also how some jobs or companies will actually contribute towards that, like my wife's company, and why we've got the plan and why we've actually got the cover. So that's on the private medical side. The next thing that we've started looking into now, well, not looking into, I've actually got it, is trauma cover and income protection. So trauma cover back in South Africa would be known as your dreaded disease. So again, grateful that I had that with Discovery. When I got diagnosed with the cancer, there was a payout depending on what stage of cancer you were at, and what your amount of cover was, is how much they would pay out to you. But I'm not going to go into all that detail. Just over here, The equivalent would be getting something called trauma protection or trauma cover. So that's, again, choosing a lump sum that you would want to pay out should, God forbid, you get diagnosed with some sort of illness or dread disease, like a cancer, etc. So I have been able to get that cover. Where I was lucky to be able to get that cover is the company that I worked with gave us cover. It's part of a benefit. And because I was part of the company and on the company's portfolio or cover for everybody at the company, they didn't look at pre-existing conditions. So because I had cancer before, it didn't look at my pre-existing condition, and I got 100% covered. When I left that company, I just made sure to keep that cover in my private capacity, because then I could keep it as in I'm now covered and they don't look at pre-existing. So it's just important, just keep that in mind. It's a way you can potentially get the cover even if you had something pre-existing like I did. So I've got the trauma cover. What I've done with my trauma cover is I've actually linked my trauma cover to my life insurance that I've got as well. So depending on how much money you've got in your budget per month, you can have trauma cover and your life cover independent. What I mean is, let's say you've got and I'm just using a number, $100,000 worth of life cover, and you take trauma cover to $100,000, you pay for them each separately. But to reduce your monthly installment, or fortnightly or weekly or however you're paying for it, what you can do is say, hey, take my trauma cover, so it's that $100,000, and link it to my life insurance, so that if I had to, God forbid, get sick with cancer or something and have to claim on my trauma and they pay out $50,000, they reduce my life insurance by $50,000. So now you would only have $50,000 pay out to you on your life insurance, but they've paid out the $50,000 for your trauma cover now. It just means that your monthly investment will be a little, your monthly payment or your weekly or fortnightly payment will be a little bit less. But there is obviously that caveat where it links to your life insurance, so it will reduce your life insurance. It's just a way to make it a bit more affordable. Otherwise, what I've done that. I've linked my trauma and my life insurance just because I wanted more cash flow per month. If you've got more cash flow, you can afford it. You've got to look at what works for you. But that's the way we've done it. Over and above the trauma cover, which is a payout if you get ill or dreaded disease like cancer, you get income protection. So I've also got income protection. So what that means is if you for some reason can't work, I don't know, you've got sick and it's going to take a little bit of time to get better. So if I use the example where I got cancer, in the beginning with my cancer, you have to go for the actual surgery, but then you have to have radiation and everything after that, and it can be really tough trying to keep a job going when you're going through all of that. So if you have income protection, it'll pay you your salary for whatever period of time you've taken income protection for. So the income protection that I've got at the moment here is I've taken income protection where it will pay me, I get paid fortnightly, so it'll pay me my fortnightly amount for a 5-year period. So I've got 5 years where I'll get paid from this policy for what my salary is today. So while I'm trying to get better from whatever illness that I would have, okay? But the idea is you want to try and get better as quick as possible and get back into the work world. You can go for longer than the 5 years, different other cover. It all depends on what your affordability is and what you can afford. What I've got is I've got the income protection where it pays me what I currently earn, and it'll be for a 5-year period. So that's all about income protection. So just making sure I'm not losing track here. So I've told you about the ACC, I've told you about the private medical, I've told you about trauma cover, income protection. The next thing that you would want to look at is you would want to look at, and I've already started mentioning it, is life insurance, but there's also something else called redundancy cover. So let's start off with the life insurance. Life insurance, I think, is pretty straightforward. It's obviously just life cover. I have got life cover that my company offered me, both at my first company I moved to here and my second. So sometimes it is benefit of the company. You can go on to the company benefit for the life insurance. With the income protection that I took or got from my previous company that I came to New Zealand on, and I kept that cover privately, it had life insurance linked to it. So I brought that across as well. So I've still got that life insurance cover with that income protection and the trauma cover on that one. But the new company that I've started with also gives me life cover. So I've also got life cover with them. So I've got X amount now all added up with life cover. A big thing is you've got to see a financial advisor to give you real advice on this, but rule of thumb is you really want to get enough life cover, in my opinion, just to make sure that if I had to pass, that my wife and the kids could carry on without me around, meaning that whatever debt we have, it's got to at least cover all that debt, and I've worked out that she's got to have X amount in the bank just to make up for what my portion would be for living expenses and stuff for the three of them left behind, because my wife would obviously keep working. So that's what we've done with the life cover and making sure that's in place. So it is important to talk to a financial advisor and make sure that they can understand your expenses, your situation, and give you the right cover for you and your family. Okay, so please, again, I'm not a financial advisor. I'm just trying to tell you what it is that I've learned and what I've got in place. So I have got the life cover, and that's what I've got in place. Redundancy cover. So back in South Africa, we had something called UIF. Again, it was a government fund, but it's if you were unemployed and lost your job or whatever else, you were made redundant, you would be able to go and claim from UIF, Unemployed Insurance Fund or whatever it is. So you could get a claim to pay you X amount of money while you weren't able to or had lost your job. Redundancy cover works in the same sort of way, but it's not a government funded thing here in New Zealand. This is a cover that you would have to take out with a private organization, just like you do with your private medical, etc., and you would ask them for redundancy cover. Redundancy cover doesn't seem, in my opinion, to be the most popular thing here, and it is costly. It's not cheap, so you really got to make sure you have enough budget for this, and generally it's also limited to a very short period of time, so it could be like a 3 or 6 months or something like that. The whole idea is, you've made redundant, so maybe your company went through a restructure or consultation process and you've lost your job and been made redundant. It'll be able to cover you and just give you enough breathing room paying your salary so that you could find another job. Now, the cover is quite expensive. I do not have redundancy cover as it is today. It's not something I've looked at the moment. Again, it's all dependent on your budget and your risk appetite and whether you'd want to do this. And not all of the same companies that offer you the income protector, life insurance, etc., offer redundancy cover. There's only certain ones that do. But that's what redundancy cover is all about, if it is something that you'd be interested in. Okay, so we've gone through the ACC, we've gone through the income protector, we've gone through the trauma cover, we've gone through the private medical, we've gone through life insurance, we've gone through the redundancy cover. The next one that I want to talk a little bit about is your KiwiSaver. So you might hear people talk a lot about a KiwiSaver. What a KiwiSaver is, this is when you're talking about getting cover for when you're older. This is towards retirement age now. So this is putting your retirement funds away. So how it works here is the KiwiSaver will be with a organization, so a financial institution that invested for you, and they give you X return depending on how they manage their portfolios, etc. When it is a KiwiSaver, it is generally, well, not generally, it is that you're saving for your retirement. So when you're 60, 65 years old, whatever else, and that's when it would pay out. So you're paying into it every single month or fortnight or whenever your salary goes off, you're paying a percentage of that to your KiwiSaver, your retirement. Usually it's anywhere, I don't know, between 3 and 10% that you would usually pay into this. When I say 3 and 10%, 3 and 10% of whatever your pay is, your what do you call it, your gross pay. What also happens with your KiwiSaver is generally the company that you work for, they will contribute towards that as well. And they will contribute anywhere from 3 to 10% as well. You've got to check on your employment contract and see what they offer. Currently, the company that I'm with pays 3% towards my KiwiSaver. There is change happening at the moment in New Zealand where I think from April next year, 2026, they are gradually starting to move towards companies contributing not just 3% now, but 4% towards the KiwiSaver, which is then obviously a complement to whatever percentage you're contributing. So if you're contributing 3% and your company is contributing 3%, that's almost 6% that's going into your KiwiSaver every time you're getting paid currently, as an example. And obviously, like I mentioned, the companies are trying to, by next year, April 2026, working towards contributing 4%, okay, towards your KiwiSaver. KiwiSaver also, there is a government contribution. If you're contributing X amount into your KiwiSaver every single year, at the end of the year, the government would pay a small contribution towards your KiwiSaver as well. I think it's a couple of $100. I think it was like $500 or something like that, but I've heard it's going to reduce, I think, for people that are higher income earners. But again, as I said, not a financial advisor, just letting you know what a KiwiSaver is. KiwiSaver is, think retirement, think age 60, 65 payout. There's a company contribution of roughly 3% going up to 4%, and you put your contribution into it as well, whatever percentage you've chosen between 3 and 10%. And so it can pay out when you're retired. Benefit to also having a KiwiSaver that a lot of people must know is for a first-time home buyer, you can use your KiwiSaver as a deposit on your first home, but it needs to be your home that you're moving into, not an investment home. It usually needs to be your own home. And you still would have to talk to a financial, like a bank, whatever that you're getting your mortgage with or your bond with, to find out that what you qualify for, what percentages that they would give you as a interest rate, over what term, etc., and what amount of deposit you would need to pay. So it all depends on who you work for. I've been blessed. I am working for a bank in New Zealand as well, so I'm at least able to get a mortgage, but I still need to save up for that deposit. But I can get a lower deposit amount percentage that I have to pay in because of being an employee, and obviously get a little bit of a reduced rate. But the point I'm trying to make is you can draw on your KiwiSaver for your first home that you're buying, that you will be moving into. If you're trying to buy an investment home, they'll say no, it doesn't qualify. I did ask. There's something I was looking into. They said to me, no, it has to be our home and we need to be moving into it to be able to use your KiwiSaver towards that. So that's what your KiwiSaver is all about, and some of the benefits to having a KiwiSaver as well. It's really important that you do talk with a financial planner and a financial advisor. Really make sure that you're investing it with the right fund. I know that the fund that I'm with at the moment, I'm probably getting a return of roughly about, I think over the past year it's been at about 10%, but since I've had my KiwiSaver, it's sitting at about 11.5 or something percent return that I'm getting. So really, you got to talk to your financial advisor, choose the right investment house that they hold your KiwiSaver with. But that's about your KiwiSaver. The last thing I want to talk about is just other investments. So what we've also done over and above all the others that I've just spoken through insurances wise and the KiwiSaver that we've now got in place, what I've also tried to start working on now is putting a little bit of extra money aside. Call it a rainy day fund, call it an emergency fund, call it, I don't know, savings account, holiday fund, whatever you want to call it, but we've started putting a little bit of money aside. What I've done over and above just keeping it in a interest-bearing account with the bank, I've actually invested it with the same fund provider as my Kiwi fund provider, but it's a separate fund that they're investing or a separate investment that they're doing for me, so it's not my KiwiSaver. I have gone in a little bit more aggressive on that investment, so I'm trying to get a little bit more of a higher return, a little bit more, but it does mean it's a little bit riskier. But again, talk to your financial advisor, let them guide you and let you know which one is the best fund to try and invest in, depending on what you're trying to do and meets your needs. I've just explained to you that it is something that we've looked into, and it's something that we're busy actively doing at the moment. So I think all I really wanted to share a little bit today is that, I know moving across to New Zealand is not easy. I know it's really tough. I know in the first year, even 2 years, it can be a mental struggle. But over and above mental, I know it can also be really difficult financially. And I know some people out there are still struggling financially. But I'm just trying to share this to show you there is hope. You can make it work. Even with the economy and everything is going on, you just got to really push hard. But you can work towards getting all these other insurances and funds and everything in place. You just got to keep at it. I also just wanted to give you a little bit of an overview of what the funds are, especially since when you first moved here from another country to here, sometimes the names are a little bit different. So like when I was talking about trauma cover, for example, how they call it dreaded disease back in South Africa, it's like just trying to get the lingo right and just trying to understand what they're all about. So just to recap, your ACC, it's already included in your pay. So that's for your accident cover and injuries and stuff like that, so you can claim against that if anything happens to you. Really hope it doesn't, but if it does happen to you, you've got that. Private medical, there's a whole lot out here. We're obviously covered with Southern Cross. Just explain why we went with Southern Cross and why we've got that private cover. There's trauma cover, which is if anything, God forbid, happens like cancer or anything like that you get a lump sum payout. Income protection, if you get ill and can't work for any reason, that it pays out your salary for X period of time. You got your life insurance. I think that's pretty straightforward. Redundancy cover, so if you're made redundant, so for X period of time, just to cover while you're trying to find another job. You got your KiwiSaver, which is for your life, for your retirement, for when you get older. And then you've just got some other investments that you can try and do for saving, to try and put a little bit of money aside for holidays, rainy day, emergency fund, etc., whatever else. So I think that's it for me today. I know not the most exciting to share about, but yeah, just want to talk a little bit about money and insurances and investments. And I really hope it helped. And if it does help, please share with whoever else you feel it would benefit to hear from this. The whole idea is just trying to help as many of us immigrants as possible so that we can really make a softer landing and make New Zealand home. So please share it and help pay it forward to as many other immigrants as possible. Otherwise, guys, you must keep well, and we'll speak soon. Cheers.